Hello students, we are going to practice how to capitalize the patent and the legal costs, and then how to amortize the intangible assets. Okay, on January 2nd, year 3 patent was purchased for $80,000. That is purchased from outside. That's why we can capitalize this patent, because it has the fair value in the market. 40 years useful life with the deadline amortization. On the July 1st, year 4, 1.5 years later, the legal cost to protect the patent incurred $34,000 and successfully defended. On December 31st, year end 4, the patent was sold at $120,000. Then we want to measure the gain or loss. Okay, first, the January 2nd, year 3 patent was purchased for $80,000. So, patent, that is the intangible asset, then cash out. Again, the reason why we can capitalize this asset is that we purchased from the market. It has the fair value. So that patent is the intangible asset. Then 1 year later, amortization of the patent that has 40 years useful life. Once 1 year passed, then we put amortization expense on the income statement. How much is that, right? Just this deadline, 80,000 divided by 20. Divided by 40. So $2,000 is the amortization expense. On the balance sheet, we have to allocate the cost, acquisition cost of this patent, which is accumulate amortization, which is the same amount as the amortization expense. Now, on September 1st, on July 1st, year 4, the legal cost to protect the patent incurred $34,000, and then it is successfully defended. Then we can capitalize this legal cost as well because it's successfully defended. So when we include all the cost, acquisition cost before using, from then on, this legal cost is also can be part of the patent. So the legal cost also patent. I'm going to just write down in order to identify what kind of cost, what kind of patent cost is. So we put 34,000. If it is not successfully defended, that is just a legal expense. And then cash 34,000, like this. So 6 months later, amortization of the patent with the legal cost capitalized. Okay, before jumping into this, why don't we put this journal entry into the balance sheet and income statement up to the year 3? Here, the cash out 80,000, and then patent we purchased is 80,000, and then amortization expense, accumulated amortization, then the net patent is 78,000, and then first year this expense is 2,000, so it should be 2,000 on the retained earning. Let me check if we measure the right balance out between asset and liability and equity. So that's it. Good. Now, so far the patent at the year 3, end of year 3, the patent net is $78,000. Okay. Then now we have to put the legal cost into the patent. Here we put legal cost on the patent. So it has been increased to $114,000, which is the acquisition cost of patent, and then cash $34,000 out. So we still the same balance between total asset and liability and equity. Okay. Now, year end 4, we have to amortize the patents. We need to separately amortize. Why? Because the time the patent was purchased was January 2nd, year 3. That has 40 years useful life with this deadline. But the patent acquisition cost, patent legal cost incurred on July 1st up to the end of the 40 years later, right? So we have a different useful life between the patent and legal cost. So let me show you. Amortization expense, the actual patent is still, we use the same 2000. Then accumulate amortization $2,000, and then amortization expense. Now we put the amortization expense for legal cost. Then how do we calculate it? Right, we have the different useful life. The time the patent legal cost incurred was, right, the July 1st. So we have different useful life, 34,000, which is the the amortizable cost times. Now how long month passed? Right, the half year divided by what is the useful life of this patent up to the end of a year, up to the end of the 40 years useful life of the patent. So we put 40 minus 1.5, right? That is the actual useful life of this legal cost, patent legal cost, right? Or just simply 38.5. That is useful life of this patent. So we record separately. The patent and the legal cost. Okay. Then put this 442. Now the patent was sold at $120,000 before jumping into. Let's put this journal entry into the balance sheet and the income statement at the year end 4. Here, amortization expense and the year end 4 is negative 2,000 and negative 442, and then accumulate amortization expense. Accumulate amortization is, now we add up this 2,442, and then amortization expense. We put everything. Okay, that's it. That this amount should be also added to in the incomes, in the retained earning. So let's put this. So we matched out. Finally, at the year end 4, the patent was sold at 100. Let's do the easy one first. Cash 120,000, and then patent. The patent out. How much do we put? Right, 114,000. 114,000. We have to put 114,000 because now the patent, the acquisition cost, including the legal cost, is 114,000. Okay. Then we need to remove this accumulated amortization from the balance sheet before disposal. It is 4,442. So 4,442, right? from the balance sheet, or let's just sum up this two. We have the same result. Then, which one is bigger? Yeah, definitely. Cash amount is 120,000, and then the book value was, how much is the book value? Book value of this patent, 109,558. So how do you calculate it? 120,000 minus. So we got 10,442, or you can just simply plug in. We got the same result of the gain. So let me put the gain 10,442. Then we have to put this gain onto the retained earning. And then let's put this, the cash now plus 120,000. Then we should remove the patent. Also, you have to remember, we have to put the plus, that is contra account. So 4,442. So we messed up. Okay, this is it. See you in the next video clip. Bye-bye.